I'm Isaac Barco from Overcome Mortgages. We're going to have a look at additional borrowing with a remortgage. So as a mortgage broker, this is something to help people with. So let's take a look at it. So for some homeowners, extra borrowing can help fund big plans, from home improvements to helping your own children onto the property ladder. But how much you can borrow and whether it's the right move really comes down to your circumstances. So when you remortgage with a new lender, you'll usually look at your income, your outgoings, your credit history, and the current value of the property. And as part of that remortgage, you may be able to increase your mortgage and borrow more money. So one reason this can be possible is increased equity over time. You've been paying down your mortgage and your property may have also increased in value. Together, that can mean you own a larger share of your home than you did before. Another reason is that your financial situation may have improved since you took out your first mortgage. So your income might be higher, your spending might be lower, or your overall profile might fit a lender's affordability requirements better than it did previously. And because every lender assesses affordability a little differently, it's possible that a new lender could offer you options that weren't available before. So if one or more of those things applies, you could have an opportunity to borrow additional funds when you remortgage. The next question is what you can use that extra borrowing for. Often people use additional borrowing for major projects or long-term goals. That could mean renovating your home, extending it, or making improvements that add value and make it work better for your life. It could also be a big purchase like a new car or another significant expense. So some homeowners look at additional borrowing as a way to consolidate debts, rolling them into the mortgage. And others use it to support family, such as helping people with a deposit or investing in education or career development. But while borrowing more can be useful, it's not something to take lightly. Increasing your mortgage increases the amount you owe, and it can lengthen the time it takes to pay off your home. Even if the monthly payments feel manageable, you're still committing to borrowing that could be repaid over many years. That's why getting advice matters. So qualified advisors can help you weigh up whether additional borrowing makes sense for your financial situation, and they can also help you explore the most competitive deals available to you. Just as importantly, they can help you understand the true cost of borrowing more and whether it supports your plans without putting unnecessary pressure on your finances. So if you're considering borrowing more when you remortgage, so it pays to plan early. So a good rule of thumb is to speak to an advisor around 6 months before the current deal ends. That gives you time to assess how much you could borrow, what it would cost, and whether it fits your long-term goals. It also means you're not rushing decisions at the last minute, because remortgaging is more than just switching rates. So with the right guidance, it can be a chance to shape your finances to suit your life today and tomorrow. So when your fixed rate is coming to an end, there's certainly a lot to consider alongside the remortgage process itself and the possibility of changing lenders, switching products, or adjusting mortgage terms. There's also the option of borrowing additional funds, so that can help with other life goals and ambitions. There's so much to think about. It's completely understandable if it can feel daunting. It's a big decision, but knowledge and expertise of qualified advisors can help simplify the entire process so your life doesn't have to pause. So you can book an appointment with ourselves, reach out via our contact details. Remember to think carefully before securing other debts against your home, and your home may be repossessed if you do not keep up with payments on your mortgage. The content for this video was approved by the Openwork Partnership on the 17th of September 2025.